Hey, it is time for the 2023 annual investment portfolio update. Woo, woo, woo. Okay, so I'm going to tell you about what my investment portfolio has done. These are all mutual funds, they are all at Vanguard in my retirement and non retirement accounts in 2023. I gave a mid year update in 2023 last year, but I'll link to, I guess, right here, just so you can see that. I've done a couple of updates over the years. I did one in the end of 2022, and I was down for the year. I am not down in 2023. I'm coming into 2024, so I'm super excited to tell you about this update and what things have been doing. Basically, I will tell you that the stock market for me did very well last year. Like I said, I have some money in individual stocks, a little bit, that I will not talk about here, just because I'll talk about mutual funds. I don't talk about individual stocks because it's so you got to feel it. And I hate to say that because it's exactly how I feel about mutual funds. I just buy the ones that I think feel good to me in a way, or feel right based on the historic numbers I'm seeing, and then I set it and forget it. I never touch it again. So I have not done anything really last year. I think I picked up one more fund. I'll try to tell you which one that was. It's in my non-retirement investing. I will tell you what it is, but first let me tell you the numbers because that's really what you care about. And that's why you're here. Let's get right to it. Let me lookity up. All right. Okay. In 2023, my investments were up just under 30%. My rate of return was just under 30%. Oh. Yes. Okay. My investment returns were $203,000. That's about what it was. That's the average. That's the rounding. But let's tell you, it's $203.29. My ending balance of my mutual funds in Vanguard was $889,380.99, and my beginning balance was $677,326.46. Over the course of the year, I purchased about $9,000 in mutual funds. So on a beginning balance of under $700,000, I made $200,000. Now, when I say made, y'all know I didn't sell anything, so I haven't realized the asset. It's just, when I do sell it, if the market continues, that's how much I will have. But as of right now, it's all just numbers in somebody's computer somewhere, right? Like, I don't actually have that money. If I sold it right now, I would. But I really am a person that believes that if you leave your money in the stock market, over time, you'll get more and more and more and more and more of it. So I take it out. Even the years that I was down, I have significantly gained on those years. In fact, I think over the past 10 years, because Vanguard gives you 10 years at the max, 10 years at a time, as far as I can figure out on their system, I have gained, I want to say either 9 or 12%, which is a big difference. But I don't have that open right now. Oh, wait, here we go. 10 years, it's right here. Right here. As of the end of as the end of January, my rate of return over the past 10 years was 11.9%. More of what I'm going to get in bank. It's an amount that I feel good about. It's no labor for me. Like I said, I put it in. I don't change anything. I just let it ride. And it's just time making this happen. So almost 12% over 10 years, including all of those down years that I had where I was down 15, 20%. It all has averaged out to 12% gain over 10 years. So I feel really good about that. I will pause right now and show you on the screen what I'm invested in at Vanguard, because people always ask about that. I'll tell you in a minute why I don't think it matters, but first, I'll show you what I have. I was thinking in my head, okay, I hope that was enough time for you to see all of that. I don't think it really matters what I invest in because I think it's more important that you are comfortable with what you invest in, right? We're all going to have different investing criteria. We're all going to have different investing timescales, right? Like you might be investing for the next 40 years. I might be investing for the next 20. You might really like risk. I might be middle ground. I'm very middle ground, right? In most, I'm a little risky, but not like for me, what works for me and what makes me comfortable is if the risk scale is 1 to 5, I'm usually around a 4. I'll go with a 4. I'm not going for a 5. I'm not going for a 1. We got to take some risks to make some money. So I'm about a 4 in the risk scale when looking at mutual funds. I don't like to do things with it, so I pick something and I just write it out. For a while, I was really trying to get into like socially conscious funds, but baby, it's just another terrible company doing terrible things. I think some of the socially conscious funds don't invest in things like jails, but they do invest in things like Amazon. Like, they're both terrible things, right? Like, they will invest in Tesla. Not a company known for being socially conscious. So, you have to decide on what is right for you. I have blinders on to what I've already invested in. It is there. Cool. It just is what it is. It's really hard to invest in the stock market in a way that is going to feed your soul. This is not about feeding your soul. It's not for me, at least. It's about making money so that I can use that money to feed my soul. The investments here are not always in things that make me feel like, yes, I'm doing right by my everywhere. Like, I'm making excellent choices for the world by where I invest. But the money I make here is money that I can use to make excellent choices outside of the stock market. And so a little bit of blinders here. It's not if I could make a different choice, I would. But when you look at what's available in these mutual funds, they're all kind of terrible. Now, the point of this video wasn't about being socially conscious while investing, but it is something to consider. Where is your money going when you're investing? And what is your goal when you're investing? It's really hard to invest your money for growth and at the same time invest only in good. Because capitalism doesn't allow that. Because good doesn't make money, generally. Evil makes money. And so you're going to invest in some things and be like, whew, I don't feel great about that. But it's in the mutual fund. I can't exactly see everything that's happening with the choices that are being made in the background, but I let it go. Anyhow, that is my investment update. I'm up a lot on paper, and I'm clearly having some thoughts about what I'm investing in that I'm not going to address. I'm just going to let it ride out. Probably not the video you thought you were going to get, but it's the video I have for you today. If you have questions about my investments, I have a couple more investment updates that I'll tag here in the description so you can see how things developed over a while. But $200,000 while doing nothing over the course of a year was pretty impressive for me, right? Like, I didn't touch it. I didn't do anything. I put, like I said, less than $10,000 in. No effort, no nothing, no rebalancing of anything, and my net worth is $200,000 higher than it was last year on paper. Anyway, I'm not sure if this was helpful, but if it gave you something to think about or if you have some questions, let me know in the comments. Talk to you later. Bye.